Can Bitcoin really surge to $250,000 in this cycle, or is it just another bold prediction? Legendary analyst PlanB has updated his stock-to-flow model, and it's causing serious waves across the crypto community and Wall Street. In this video, we'll break down Plan's latest forecast, what stock-to-flow actually measures, why this prediction matters more now than ever, and whether Bitcoin really has the fuel to make this historic move. Get ready for facts, strategy, and insight that could change the way you look at the future of money. PlanB's new $250,000 target shocks the market. PlanB has once again captured headlines by updating his Bitcoin stock-to-flow model to forecast a staggering $250,000 price target. This is not just a random guess. It's a projection built on mathematical models that have historically tracked Bitcoin's price cycles with surprising accuracy. PlanB's influence in the crypto space is massive because he combines statistical rigor with practical insights, offering a roadmap for investors trying to navigate Bitcoin's wild volatility. The $250,000 prediction has reignited optimism across social media, institutions, and crypto funds, signaling that many believe Bitcoin's best days are still ahead. Whether you believe it or not, PlanB's call has thrown gasoline on an already simmering market sentiment. Understanding the stock-to-flow model. At its core, the stock-to-flow model measures scarcity by comparing the current supply of an asset with the amount being produced each year. Originally used for gold and silver, PlanB adapted it for Bitcoin because of its fixed maximum supply of 21 million coins. High stock-to-flow ratios indicate scarcity, and historically, assets with high scarcity tend to hold or increase in value. Bitcoin's predictable halving events tighten its supply, pushing the stock-to-flow ratio higher over time. PlanB's model suggests that after each halving, Bitcoin's price experiences exponential growth. This statistical structure is what forms the backbone of his $250,000 prediction, providing a compelling argument that Bitcoin's scarcity alone could drive prices far higher. Why timing matters. Post-halving explosions. Bitcoin's price history shows a clear pattern. Massive rallies tend to happen within 12 to 18 months after a halving event. With the latest halving just behind us, the timing of PlanB's prediction feels eerily aligned with previous cycles. After each halving, Bitcoin's new supply gets cut in half, creating supply shocks just as demand often picks up. Historically, this has led to parabolic rises. PlanB's stock-to-flow model heavily weights these supply shocks in its calculations. If history repeats, or even rhymes, then the next 12 months could be crucial for Bitcoin's trajectory toward that ambitious $250,000 target. The clock is ticking, and investors are paying attention. Institutional interest adds real fuel. Unlike previous Bitcoin cycles, this time, institutions are already here. With the launch of ETFs like IBIT and increased custody solutions by firms like Fidelity and BlackRock, Bitcoin isn't just retail-driven anymore. PlanB's $250,000 prediction gains added credibility when you factor in the sheer amount of institutional capital that could enter the space. Pension funds, endowments, and insurance companies, even with a tiny allocation, represent trillions of dollars in potential buying power. As these players seek hedges against inflation, currency debasement, and geopolitical risk, Bitcoin becomes a compelling option. PlanB's model anticipates that supply shocks combined with institutional demand could create the perfect storm for an explosive rally. Scarcity amplified. Bitcoin held in custody. Another overlooked factor strengthening PlanB's thesis is how much Bitcoin is now being locked away. Increasing amounts of Bitcoin are being moved to long-term custody wallets and ETFs, effectively removing them from active circulation. When Bitcoin gets locked up and isn't actively traded, it intensifies scarcity, something the stock-to-flow model counts on. Less liquidity means that even moderate new demand can push prices higher much faster. As more investors adopt a buy-and-hold mindset, Bitcoin's liquid supply continues to shrink, setting the stage for supply-demand imbalances that could support a price explosion toward $250,000 and beyond. Critics and their biggest arguments. Not everyone agrees with PlanB's stock-to-flow model. Critics argue that markets are more complex than simple scarcity equations and that macroeconomic variables, regulation, and investor sentiment can't be ignored. Others point out that past performance doesn't guarantee future results, especially as Bitcoin's market matures and grows. Still, even critics acknowledge that Bitcoin's fundamental scarcity is real and impactful. While the stock-to-flow model might not be a crystal ball, it remains one of the few models that have roughly mirrored Bitcoin's major cycles. Understanding both the strengths and limitations of PlanB's prediction is key for any serious investor navigating this landscape. Macroeconomic factors could supercharge Bitcoin. Beyond Bitcoin's internal dynamics, the broader macroeconomic environment is flashing signals that could supercharge PlanB's $250,000 thesis. Inflation fears, ballooning government debt, weakening fiat currencies, and geopolitical instability are driving investors to seek alternative stores of value. Bitcoin, with its capped supply and decentralized structure, increasingly looks like an attractive hedge. If central banks continue aggressive monetary policies and geopolitical risks escalate, Bitcoin could benefit immensely. In that context, PlanB's bold target doesn't seem far-fetched. It might even prove conservative. When macro winds blow in Bitcoin's favor, price moves can be faster and bigger than anyone expects. Retail hype vs. strategic accumulation. The excitement around a $250,000 Bitcoin price will undoubtedly ignite retail hype. Social media will buzz, and FOMO, fear of missing out, could cause speculative bursts. But beneath the surface, smart investors are taking a very different approach. They are strategically accumulating, dollar-cost averaging, and preparing for long-term gains instead of chasing short-term pumps. PlanB's model is a tool for framing these strategies, not gambling on daily swings. Understanding the difference between hype cycles and disciplined accumulation could make or break investors as Bitcoin's next big move unfolds. Those who stay focused have the best chance of benefiting if the $250,000 scenario plays out. Is this the last massive opportunity? Every Bitcoin cycle has a moment that looks obvious in hindsight, but devastatingly hard to act on in real time. If PlanB's $250,000 prediction holds true, today's prices could soon look like a once-in-a-lifetime buying opportunity. As Bitcoin matures, future returns are likely to diminish compared to its early explosive years. A $250,000 Bitcoin would mark a psychological and financial milestone, firmly entrenching Bitcoin as a major global asset. Acting cautiously but decisively today could mean the difference between riding the next wave or watching it from the sidelines. History tends to reward those who act while others hesitate. Betting against PlanB has been expensive. Over the years, betting against PlanB's stock-to-flow model has proven costly for skeptics. While not perfect, the model has captured Bitcoin's broad price moves with impressive consistency. With the $250,000 target now on the table, the stakes are higher than ever. Whether you're a believer or a skeptic, one thing is clear: Bitcoin is entering a pivotal phase. Understanding the data, the trends, and the underlying forces gives investors a real edge. Staying informed and strategic will separate winners from watchers as this new chapter unfolds. The next move could change the financial landscape for years to come. Thanks for watching today's deep dive on Nexus dividends. If you got value from this breakdown, smash that like button, share your thoughts in the comments, and subscribe for more hard-hitting, fact-driven insights. Your support drives us to bring you even bigger and better content. Stay sharp, stay invested, and we'll catch you in the next video.